Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. And we are recording from beautiful Miami. We're down here at our Advisor Growth Retreat Conference with a big group of our advisors where everybody's trying to learn how to better serve you guys as clients. So really a wonderful time for the firm. Not such a wonderful time for the markets, however. Monday was a pretty rough day. The S&P 500 trading off about 2.7% in a single day. That is the largest sell-off we have seen on a daily basis in a while. That market turmoil really being driven by a couple of factors. The first is over the weekend, the administration came out and basically said that it might be necessary for the economy to suffer some short-term pain in order for the administration to achieve their sort of long-term economic goals. The second factor really driving the markets is some increased fear or sentiment tied into that first factor of the potential for a recession here in the next short to medium term. So seeing some negative sentiment data, some negative pricing surveys, et cetera, all tied up in that economic data. The S&P 500 off about 8.6%. Now, that's not even in correction territory. That is, a mild sell-off. Once again, we expect corrections to occur at least one time a year. However, there are some more visible areas of the market that have sold off more than that. So if you look at the Mag 7, those super popular names, Tesla, et cetera, those are off about 16% since the peak in sort of mid to late February. That's really driving a lot of the negative sentiment, a lot of the narrative around this sell-off. You look at the NASDAQ, that is in correction territory, down over 12%. And so there's a lot of fear being bandied about. You look at some of the more benign areas of the market, you've got the Dow off 6%, you've got international stocks that are basically flat, you've got bonds that are up 1%. There are pockets of stability within this, area of insecurity. And that really brings me to my first point, which is, we really need to be aware of the benefits of diversification during market environments like this. Really does help out that diversified portfolio. It's the reason why we diversify portfolios, is to make sure that we own the portions of the market that provide a little bit of stability or a little bit more, not necessarily less positive correlation between all the various market segments that are out there. The second thing that I always find is important to remind people during market sell-offs is the power of perspective. So yes, we are off 8.6% on that S&P 500 since the start of the sell-off. However, we're only down 4.3% since the beginning of the year. And if you look back, it was really, we're back at the level for the S&P 500 that it was on September 18th of last year. So less than 6 months ago, we were celebrating this level as a new high for the market. Really haven't given up all of that much in terms of overall time frame of market returns. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.